stock of the day today as James Hardie. Last I checked, the company was the best performer on the 200 after unveiling a $200 million share buyback and reporting a record second quarter profit as higher selling prices and lower costs offset a decline in volumes across its key segments. Global net sales came in just shy of $1 billion with adjusted net income of $180 million, up 2%. Adjusted earnings per share were also higher to 41 cents, up 3%. Operating cash flow up 74% to a record. And looking ahead, the company sees third quarter adjusted net income to come in between $165 to $185 million. So, really interesting story, I think, being told here, guys. I've had a few notes pop into my inbox, one from Goldman Sachs saying, the first take is that the quarter was in line with expectations, but the third quarter guidance was substantially stronger. It rates James Hardie a buy. What are your thoughts, Shaun?
Look, you have a look at a company like this, the record profit, share buyback, we're up about 13 or so % when I checked a few minutes ago. It's pretty hard to put a buy on it right here. I'd probably say we'd look to buy if it was to fall another 10%, pull back to where it was. I think that they'll continue to do really well, and I think profits and revenue will increase. I think what we see, some of the reports we've read, is that as housing prices increases, renovations increase, and increased renovations obviously help companies like James Hardie. I think if you've got it, certainly hold it. But I wouldn't put a buy on it right now, not until it pulled back a little bit.
So just too expensive at this time. It's an interesting one, isn't it, Michael? Because we've had a lot of doomsday scenarios painted about even the U.S. housing market. Yes, lots of people are locked into 30-year mortgages, which makes them less likely to move. So new building perhaps slowing. But to Shaun's point, renovation, perhaps it's a renovator's renaissance happening now.
Yeah, well, that's potentially what we're seeing with the forecast going forward, because as you point out, new home starts in the US have just fallen off a cliff because no one's out there buying new homes because no one wants to take on a new mortgage with the rates so high and given the way that their mortgage system works. James Hardie gets 66% or roughly 2/3 of their revenue from the US, so it's a very important market for them. But today's update showed that they've been able to increase prices, I think, about 15%. It's always a good sign that even in a tough market, if you can increase prices and get away with it. And they're also winning market share despite those price increases in the plasterboard part of the market. So pretty enviable position for this company to be in. They are very high quality. It's potentially a bit counterintuitive given everyone's pretty pessimistic on housing markets domestically and overseas. But this is one that we do hold for a lot of people, and we're happy to buy more off the back of the good report. Again, there is still a lot to play out within the broader landscape that James Hardie plays in, so I wouldn't be increasing your weighting too much. But if you don't hold it, we'll be comfortable to add this to a portfolio.
So that's a buy.
It's a buy.
Even today.
Even today. Hopefully the analysts come out tomorrow with upgrades and it does another 5%.
All right, hope's not a strategy. Anyways, Michael, we'll leave that one there.